Cheap isn't just a word, it's a mindset. When others see the abundance of broken and used and abused real estate, you see opportunity. However, without the right strategy, this opportunity can become a costly problem. Today, I'm diving into 3 tragic mistakes people make when bidding at tax-defaulted real estate auctions. Before you invest, I suggest you seek the services and advice of accountants and legal advisors, and to be specific, I suggest people with tax-defaulted auction experience. As you begin, keep in mind the local government sells real estate at auction as is to rid the county of tax-defaulted, sometimes abandoned real estate, and to collect defaulted past due taxes. The auction sale, in many instances, is selling used and abused real estate. Therefore, they sell it as is, buyer beware. Ted Thomas is an author, investor, and a guide, not an investment guru. Distressed properties can present unique opportunities for investors looking to purchase below market prices. It is critical to carefully evaluate and estimate the cost of renovating, repairing, and knowing the after-repair value before bidding. To make money reselling tax-defaulted property, the repairs must be economical. Repairing and renovating properties is a skill. Newcomers continuously make large mistakes. For some reason, many think clean and paint cosmetic repairs is all that is required and a quick sale will take place. It would be better to think and understand that properties could require extensive repairs that may even require building permits and outside contractors. Locations, neighborhoods may complicate finding labor and influence the expenses on the project. It is important to understand your own skills and experience and what is required before you bid. Let's pause for a moment and allow me to say what you are discovering today in this presentation is not theory or forecasting. It's a process. It's what's working right now in this market. This strategy and process may develop high income so you can get paid the income you deserve. Not everyone understands that tax-defaulted real estate is abundant and available in all 3,000 plus counties. The government auctions to sell and rid the county of tax-defaulted real estate and recover past due local delinquent real estate taxes. This property is sold as is, where is. That means buyer beware, caveat emptor. The potential to purchase real estate properties at a fraction of their market value is exciting as well as challenging. It's an understatement to say this process requires due diligence. It's critical that investors evaluate the purchase potential. It's important that the investors be cautious and investigate the risks, starting with buyer beware. Tax-defaulted real estate is sold by the local county treasurer as is. The county disclaims any responsibility of the physical condition of the real estate. The tax sale is as is, where is. My interpretation of that is what you see is what you get. Tragic mistake number 1. There is no substitute for boots on the ground. Many beginners and newcomers fail to thoroughly look at the property. I'm talking about physically having boots on the ground, rain or shine. It's tragic to learn that beginners at tax-defaulted property auctions regularly fail to evaluate the property accurately. That means physically at the site. Add to that, they fail to review the county records for title defects. It's not unusual for unaware investors to purchase burned down properties and other difficult situations. Tragic mistake number 2. It's not just about whether the area looks good, it's about evaluating the neighborhood conditions. Newcomers must review, how is the neighborhood trending, improving or getting better, or is it no longer the most desirable neighborhood and it has flaws, like it's impossible to find a parking space, or there's low-level crime that's obvious. Many beginners are in a hurry. Neighborhoods can easily be overlooked, especially when the property pricing at the tax-defaulted auction appears to be too good to be true, 70%, 80%, 90% below the comparable market prices. Keep in mind, you can fix most properties. However, you can't fix the neighborhood. If you are serious about success in the tax defaulted real estate, consider learning from someone who has been there and done that. Your objective is profits. A low starting bid isn't always a shortcut to success. What you need is a well thought out process, a vision of the completed project. In other words, a strategy and a plan. The difference between someone who gives themselves a big headache buying junk and someone who makes a generous profit from a used and abused cheap property is the amount of research, planning, and vision. Once again, your objective is profit. Tragic mistake number 3 is where most beginners fail. The business of buying at tax defaulted property auctions is the business of margin. Simply stated, margin is the difference between what you paid to purchase the tax defaulted property at auction and what you sell the rehabilitated property for resale. The risk is not understanding the cost of repairs, the ARV, after repair value, and not calculating and estimating the selling value in the comparable neighborhoods. There's also risk that the contractor, if you're not doing it yourself, making a big mistake on the amount of dollars needed to rehabilitate. This could be the difference between a 6-figure profit and a financial disaster. The solution, in my opinion, is my answer to the following question. The question beginners ask me regularly is, Ted, what simple thing must I do to be successful? My response is, I have found that working with an experienced coach or mentor accelerates the learning process and reduces errors and prevents financial headaches. Add to that statement, utilize an experienced coach or mentor who has previously experienced purchasing at auction and experienced the process of rehabilitation and reselling the real estate and collecting the money. This creates great comfort and is a wise decision. Avoid these costly mistakes and start investing right away. Download my free guide on tax defaulted property investing and learn the exact strategy I use to turn distressed properties into profitable deals. Click the link below to get started today.